Hi guys. So it looks like we're gonna have a lot more Mondays like this since the quarantine has been extended until May 15. So hopefully last extension na yun, di ba? Okay. So as we said last week, I think we're starting to see the flattening of the curve, at least for majority of the major countries here. Although may mga konting outliers like Brazil, Russia, India, where the infections are rapidly increasing. Okay. So what now? So I think this is far from straightforward. There's a lot of uncertainty, a lot of unknowns, di ba? So I think it's hindi na siya black and white, stay at home or open it up. Diba? Most likely it's going to be some kind of opening it up, and it's going to be like a stop-start depending on what happens. Diba? So one such possibility is like in 1918, there were multiple peaks in the pandemic waves. Diba? So I think this is a good expectation for second half of the year. Diba? Second peak is a big possibility. So hopefully everyone has learned already. Sanay na tayo mag-social distancing and staying at home, diba? And hopefully everyone's better prepared for this. I think that we're going to go back to normal probably in 2021 until the vaccine is out. Diba? And I think in times like this, it's also important to have very good leader. Diba? So in my opinion, pwede tayong mag-usap later kung hindi ka agree. I think Angela Merkel of Germany has been doing a great job in navigating Germany out of this crisis. Diba? So diba, last week I showed you guys that Germany was starting to open up. Diba? So I think that ang sabi ni Merkel, we have to be prepared for the long haul to fight against this coronavirus. So sabi niya, it's only the beginning of the fight, and that Germany is in very thin ice. Diba? And social distancing is here to stay. So I think that ang galing niya that he's very transparent with all the data and all that they have to do. Realistic, walang hype. Okay, and so I think we need that kind of leader. So in contrast, again, you can disagree with me. I think that the leadership in US is really, I don't know, showing a lack of leadership. Diba? So for example, this tweet on the left, this must be the craziest interview I've seen in my life. Okay, that Anderson Cooper was, I don't know, basically fighting with this Las Vegas mayor who wanted to open things up, who was saying that, okay, it's up to the business to do whatever they can to protect against the coronavirus, diba? So gagawin daw silang guinea pig. So what, diba? Second, I think Andrew Cuomo of New York is very good. So recently, he's been fighting with his Senator Mitch McConnell. Sabi niya, just let the New York go bankrupt since it's a blue state. Democrat kasi. Diba? So I think that it's not the time for partisan politics. Diba? It's the time to come together to help the people. Diba? And last, I think this, and they're right. So this is people going back to the beach. I think nasobrahan ng social distancing. They want to get some sun. So yeah, so I think that when you have a lack of leadership, things like this happen. Then lastly, si Trump. I don't know. I don't even know what to say. So Lysol came out with a warning not to inject disinfectants after Trump said that it's a possible treatment. Well, he said that, but of course he took it back. Sarcastic daw siya. Anyway. Okay. So second, I think this is something I never thought I would see in my lifetime. Oil goes negative. Last week, at least the one for May delivery. So yes, ang negative oil price means that the producers are paying you to get rid of their oil. So how can this happen? Of course, the demand all over the world is down maybe at least 30%. Everyone's staying at home. So you have overproduction. Because it's not that easy to shut down the production of oil wells. And couple that with fast filling up storage. Kasi they are storing the oil in tankers in the sea. So the price of the daily rates have skyrocketed maybe, I think 1,000%. So in that situation, anything is possible. And I think that if this persists in the second half of the year, it's a big deflationary force. Because you guys have to remember that oil is a major cost component of everything, so it's deflationary. And I think it's going to put a lot of stress on the balance sheets of companies and even entire nations who are very dependent on oil and commodity prices. Okay, so as you can see here, it's only gold that's up for the year. So we'll discuss that later. Okay, next. So I showed you guys last week that emerging markets were underperforming. So the rally has been very strong in the US, especially the tech stocks. And as you can see here, emerging markets are underperforming badly. And Philippines is underperforming the entire emerging markets. Okay, so this has been the flows on the left. So yeah, on every time frame, weekly, monthly, quarterly, year to date, 1 year, it's been net foreign selling until today. Okay, so I guess what's happening in emerging markets? So I think one of them is really global trade is going down, commodity prices are going down. So that means that emerging markets are making less dollars, meaning less dollars are coming in. And that's not a good thing when you have a lot of debt. So in emerging markets, there's 13 trillion in dollar-denominated debt. Half of that is short-term, meaning maybe they're going to be due in 1 year, 2 years, 3 years. So if you have less US dollars coming in, it means it's harder for you to pay. And that's added to the weakness in emerging markets forex. So this is the Asian dollar index. So it's already at the 2009 low. Okay. Another thing is that if you look at the stimulus, monetary and fiscal stimulus, it's much smaller versus developed markets. And walang bailouts din, notably. And I think dito talaga style ng emerging markets yun. And of course, you have the poor response to coronavirus. So this is in Brazil, nagkagalo sila. So this is Bolsonaro, the president. So as you can see, defiantly taking off his mask. He just fired his health minister kasi hindi sila magkasundo. He thinks that masyadong seryoso yung mga tao sa coronavirus is not that big of a threat. He doesn't support social distancing, lockdowns. Diba? So yeah, it's a big problem over there. Diba? Okay, so I think that a lot of factors why emerging markets are underperforming. Okay, lastly, so this time I think we're gonna put a spotlight on gold. So we liked gold ever since last year, when we're seeing the prospect of slowdown and the start of money printing. So you can see here, this is the price of gold, and this is the balance sheets of the 8 largest central banks in the world. So they're, of course, very correlated. So I'll explain why later. On the right is the balance sheet of the Fed. Okay, so you can see, first point here is 2008-2009 crisis, right? So balance sheet of the Fed increased 151%. So this year, the balance sheet of the Fed has increased 57% so far. So more than 2 trillion of money printing. So it can reach 10 trillion at the end of the year, in your forecast. So it's more than double the balance sheet. So that's a lot of money printing. So, and usually that's a good environment for gold. So this is the long-term chart of gold. So we're at the previous high already. Okay, so in 2008, it more than doubled, 800 to 1912. Okay. So we're already seeing a lot of forecasts. I think 3,000, 4,000, 5,000 gold. I think it's entirely possible in the next few years. Okay, and if you want real gold, it's already at a premium actually, because there's already a shortage of physical gold in the market. Okay, so pag may time tayo, pwede tayo bumili nito. Okay, but they're mostly out of stock. What we advise is going for GLD. Okay, kasi itong GLD, you can request for the delivery of the underlying commodity. Meaning, pwede mo pa-deliver sa bahay mo yung gold. Okay, just in case the financial markets really explode. May article just to end this part. May article survey Dalio came out last week about money, debt, and credit. So there's a good explanation here why he thinks that gold is going to go up. Okay, so and what he's saying is that when governments print a lot of money and buy a lot of debt, diba? So similar to today, it cheapens the money and debt. Diba? Kasi you're printing a lot of money, diba? And when that happens, when the holders of that money and debt, or for example, government bonds realize that the Fed is printing so much money and the money is going to be devalued, they switch their money away from the government bond and into gold. Diba? Kasi parang hindi na sila confident that this paper asset is a good storehold of wealth. Diba? And at the end of the long-term debt cycle, sabi niya kasi parang taking time bomb yung debt. At the early part of the cycle, when there's not a lot of debt, it's rewarding to hold a bond, for example. But at the end of the cycle, for example, today, when the yield on a 10 years is just 0.6%, and the government is printing a lot of money, borrowing a lot of money, and there's no chance that it's going to be paid. So most likely naman di magde-default in US, but what they're going to do is, right now, they're printing a lot of money, meaning they're devaluing that money. So in that environment, gold goes up. Okay. Okay. So I hope that was a good explanation. Zarr, it's up to you now.
All right. Thank you, Jason. Good afternoon, guys. Today, I'm just going to talk about my process of how I look for opportunities in the market. So I'm going to focus on the US market. So usually, for idea generation, there's Twitter. I follow a lot of investors, traders. It's a huge, I mean, there are a lot of traders or investors you could look at with a lot of ideas that you're talking about. Then there's Bloomberg. I just read every day. New York Times, Seeking Alpha. And also recent company movers, those that gap up, right? 10%. Usually may mga news yan. So those are the stocks that you put in your watch list. Then there's investing blogs and newsletters I subscribe to. So for the US, I usually focus on 4 categories. So there's recent IPOs, and hot industry stocks or stocks with industry momentum, stocks with interesting narratives, and stocks with significant news recently, like acquisitions, spin-offs, or earnings beat. So today, I'm just going to focus on my favorite category. It's the hot industry or stocks with industry momentum. Usually, kasi, in this category, you'll find a lot of stocks moving, and usually yung moves nila sustainable for a few months or a year. So, like I said, for industry momentum. So usually you see the industry with improving economics due to macro factors or sector-specific changes. So examples are airlines in 2013, marijuana 2017, cyber sector 2016. So for this year, it's been discussed for a few weeks already. So the stay-at-home stocks like Netflix, Roku, Python, online retail communication, Domino's, Amazon, there's Zoom and TDoc. So there's cloud computing, Amazon, Microsoft, AMD, and the COVID-related issues, the informed spec stocks like Eno, Myrna, and APT. So I'm just gonna talk about a little bit about these COVID-related stocks. These are informed specs, so usually it goes in my list because usually you could see like a few weeks before it shoots up mga around 40% in a day with the news na for Myrna, it's a vaccine for COVID. So it's hard to participate initially, pero you have to keep it in your watch list because eventually when it consolidates, you could look for chances to enter. So this one I wasn't able to participate, but in the next stock, just a second, for Eno, this one, look, around March 5, it went up around 40 to 50%. So it's already in my watch list. So what I'm looking for is around 1 to 2 days of it's gonna pause. So after 2 days, 2 days, I was expecting mag-pause siya dito eh. Since tumuloy siya, I entered intraday. So sorry, here, this intraday chart. So this is what we call red to green. So parang when it opened, it went down for the first 5 minutes. Then it showed its strength. Then it rallied back. Tapos I put my stop already here. So when we see usually this kind of formation, it's very malakas siya. So we put my cut here around 0.3% VAR. Then just rode the stock until the next day. So the next day, usually because it's just informed spec, you sell on the surge. Kasi like in hindsight, when bumalik siya the next after this surge. So another stock in my watch list is APT. This stock is manufactures N95 masks. So they reported early last month surge in demand like 100%. So it went up. So right now it's just consolidating. I'm just still waiting for uh, renewed activity like if you see here. If kinalimutan mo na to, tumuloy rin siya. So you have to put these guys in your watch list. These kinds of stocks, they're very they're speculative and volatile, but they can also supplement your returns. Just make sure you put on your proper stops and proper allocation, since they move explosively. So moving on. So usually for the speculative stocks, usually they're hard to quantify. Like so, it's hard to determine if there's more upside or if what's the potential. So usually they're just speculative. So what I focus on is stocks in industries na have recent momentum due to recent improving economics in their industries. So when I see this industries, what I look for is if check if there's a huge disparity in price and value. It must have a significant potential, asymmetric risk-reward ratio, and clear and near-term catalyst. So I'll give you an example. So tankers. So for tankers, you see that even though like it's been up for like 40% most of the tankers for the past 1.5 months. For oil, which has led to skyrocketing tanker rates. So, and a lot of these stocks have been in a 8 to 10 year bear market already. So they're selling for less than liquidation value and significant discount to NAV. So due to high tanker rates, these stocks have high operating leverage, resulting in a sharp increase in their operating incomes. So due to the COVID-19 shutdown, economies globally have locked down. So there was a sudden drop in demand for oil. So and also supply of oil was not being reduced as producers also needed revenue, like the Russian and Saudi Arabia price war, which they increased production, flooding the market with a lot of oil. So usually the world has normal demand of 100 million barrels per day. So with the COVID-19, this demand declined to 20 to 25% roundabouts. So around like 20 million barrels per day of surplus of oil since nag-shut down globally. I mean, all the economies of the world. So if you like, we're already like 50 days into the shutdown. So if you extrapolate that, that's around 1 billion barrels of oil already. And if this shutdown extends to 100 days, that's going to be around 2 billion barrels of oil surplus. So, so the question is, where will they store all this oil? So the answer is the tankers. So for tankers, there are various sizes of tankers, like we call the VLCC. It's the it stores around 2 million barrels of oil. The Suezmax, which stores 1 million barrels of oil. It's the largest ship that can travel into the Suez Canal. That's why it's called the Suezmax. The Aframax around 600 barrels of oil in capacity. So around 43% of the top 10 oil tanker companies own the VLCC. So how long will this last? I mean, tanker rates. So, well, oil tankers are going to be needed for storage as long as the production stays higher than demand. So I don't think the supply and demand imbalance is going to equalize in the second quarter. If you look at the 2 billion barrels of surplus, it usually an analyst estimated that it could take 3 years to work off that oil buildup. So if you compute it, like 2 billion barrels of oil, like for example, if demand recovers and absorbs 5 million surplus per day, that's around 400 days already, or more than a year. So this conditions seems like it's gonna go on for a while. So with the land storage already full, the floating storage is the only game in town left. So as you saw in the news recently, like oil tankers just floating around the coast of California, and even like 2 months ago in the coast of China, uh, there was already news about this. So what happened was, due to high demand for tanker storage, tanker rates have skyrocketed. Like since the start of March, it was around 30,000 per day to the end of April, around 300,000 per day. So you can see here, March 6th at 30,000, then April 200 to 250,000 per day, then until April 21, 250,000 to 300,000, going back to 150,000 to 175,000. So another thing about oil tankers is operating leverage. So since they have high fixed costs, around like 25,000 to 30,000 per day, they have to. This is their break-even rate, but for the past 3 years, oil tankers have been losing money because they've been making only, the rates have been around between 12,000 to 23,000. This is called the time charter equivalent. It's the amount paid to transport oil for oil tankers. So they have to break even around 25,000 to 30,000. So what happened was, so here's the breakdown of their costs. So they need to at least make, the rate must be at around 23,000. So they could pay for their OPEX, interest payments, maintenance costs, etc. So this is an example for Euronav. So when the rates are around 300,000, so it said that any 5,000 increase in rates is equivalent to a 72 million improvement in EBITDA and revenues. So if you compute that, amounts to around 3.96 billion in EBITDA already, and compare that to the current market cap of Euronav, it's around 2.96 billion. So it's ridiculously cheap. Then if you add the value of their vessels, so according to Euronav, the last 10 years, VLCCs were worth around $80 to $160 million. So, but I checked recently, around VLCCs were bought around 45 million. So just being conservative, let's say 35 million. I mean, the worth of each vessel of Euronav's around 35 million. So they have 72 vessels. So you compute that equals to around 2.5 billion in value for the entire fleet. That's excluding all their other vessels, smaller vessels. So let's say because of the tanker rates, because of high demand, the value of these vessels have already increased. Let's say it's around 10 million. So that's another 720 million additional value. So if you compute everything, so the value of the fleet's around 2.5 billion or $12 per share. Another $3 for the increase in value, and then EBITDA or free cash flow around 18 per share. So the company has a net debt of 5.5 per share. So sum it all up, that's around 27.5 per share of NAV. And Euronav last price was trading around 11.30. So there's a huge discount to NAV, more than 50%. And the good news is recently Euronav updated um, their financial data. So they said that every 5,000 increase in rates is now equal to $120 million in EBITDA. So you just plug that in. That's another $10 additional in free cash flow. That makes the value of the Euronav around 37.5 per share. So usually tankers trade around, well, depends on, it's just a cyclical company. So around bull markets, you could trade around 4 to 5 times NAV. And during bear markets, such as today, it trades below 1 times NAV or 50%. So it won't be unreasonable for us to think that it could trade around 1.25 times NAV per share. So if it trades around 1.25 times NAV, it's around $45 per share. That's more than 4 times its value currently. So out of the entire fleet of VLCCs and vessels of the crude tankers, around 7% are used for oil storage. And according to the Euronav CEO, the entire fleet of the VLCCs are available for oil storage. So you could just imagine how much money they're going to make if the entire fleet stores all this oil. So additional notes. So if there are less tankers to transport oil, this is going to push rates for moving and storing oil up. So as demand for storage increases, even higher, the supply of vessels keep shrinking, and this will result in higher rates. So analysts are expecting rates to go toward 400,000 to 500,000 before declining to 100,000, which is still an excellent level. So just to show you how bullish the tanker people are, the Scorpio Tanker CEO recently bought 2 million call options expiring 2021. And even like tankers already broke into mainstream with Jim Cramer talking about the tankers recently. So just show you what's the potential for the tankers. The last time the rates went up, this is what happened in 2005, 2007. This is for frontline tankers. From 1060 it went to 350. So I'm not saying it's going to go there, but just to show you what happens when rates for tankers explodes like this. So, but there are also risks, like if rates suddenly collapse or there's an unprecedented sharp decrease in oil production for oil, and significant recovery in demand. So that's what are the risks you're going to look for. But as I showed you previously, it seems like, I don't know, like it's difficult to see how supply demand imbalance is going to equalize in the short term. So here, just an example of a stock I traded. This is a Nordic American tanker, or NAT. So I was looking to enter here, but I wasn't able to put a position. It's already gapped up. So I just entered intraday again, knowing that because there was news about the oil futures that day. So during the intraday, I just put my stops here, and the stock went red to green again. I just trailed my stops. Then I just sold when it gapped up because already up like 25 to 30%. The thing with tankers is very volatile. One day it's up 20%, then the next it could be up down 10 to 20%. So you just have to be careful. So here's just a list of companies I'm looking at. These are the VLCCs. It means very large crude carriers, and here's their the other mid-size tankers. So that's it. I'll give you back to Terence. Thank you.
Thank you, Zarr.
Thank you.
So I'm here today to talk about our process in Hong Kong trading. So specifically, I want to talk about the Hong Kong biotech sector and the new opportunities that we see within this sector. So first, I'll just talk about the process that we go through for our stock picking. So the resources, basically most of them are free. So I read Bloomberg every day. I have a team of we're 4 people looking at Hong Kong market, and we constantly read all these resources. We go to aastocks.com. So we go here for our news and for the IPO list. So it has a complete list of stocks that are going for IPO, including the oversubscription rate, so you can gauge the demand of the market. So I think globally, Hong Kong is neck and neck with Nasdaq in terms of IPOs. So if you're looking for new place, a lot of them are coming to Hong Kong. Okay, then we also read a lot of South China Morning Post. This for their news and their real-time stocks blog, which I'll show later. Then I do a lot of search in Google for news. Then you could also look for company disclosures at Hong Kong Stock Exchange website. That's hkexnews.hk. For screening, which I'll also talk about a little bit later, you can use tradingview.com. I think they have a minimal fee, which is very reasonable. And then you can also go to company websites, but more or less this is the last resort, because in terms of information, it's really very scarce in terms of the company themselves posting it on their websites for Hong Kong companies. So this is an example of the news that comes out from AA Stocks. So you just go to their latest news tab. You can see earnings, you can see economic news on a day-to-day basis. You can also see analyst upgrades and downgrades. What's nice about AA Stocks, you could play around, then you could see the peers for each stock, because Hong Kong is different in terms of how it moves by sector, because Hong Kong stocks, probably 80 to 90% it moves by sector. Like today, it was all biotech and all educational stocks. So the reason for that is Hong Kong is a retail-dominated market, and retail investors, they usually don't do much in terms of reading their fundamentals. They just pile into the hot sectors. So it's easy to spot which sectors are trending, and that's where we tend to stick to. Also, this what I mentioned earlier, this is the IPO list from AA Stock. So you can see, like recently, the hot IPO was the one at the top of the list. That's Akeso Biotech. So that's 9926. So it listed at $16. Right now, it's doing about $27. So more than 50% return. Okay. Okay, this is what's really useful to us. When you go to South China Morning Post and you go to the business section, probably about 9 o'clock every day, they start posting this stocks blog. So it's a real time blog. So you can see there's time stamp there. As news comes out, you can see the news real time. And there's sometimes some analysis. There's economic news. You can also see the upgrades and downgrades. Okay, so this is very useful. And then for sometimes you just have to be resourceful. If you cannot get the information from the companies themselves, I just Google it. So like one stock that I like, Innovent Bio. If you just Google it, then go to the news tab, you can already see the relevant news, the main catalyst that's making it move. Stock screener, I just lifted it from tradingview.com. Personally, I use Bloomberg. But if you don't have Bloomberg, you can use TradingView. Is a very good substitute already. It's almost equivalent already. Okay, so screening process is basically the same what I teach at the executive course. Sometimes you find it through price first. Sometimes you find it through the news that we read. So we do a lot of both every day. But if you're trying to screen for new candidates through price, it's basically through price and volume still. So my style personally, I like a lot of the speculative companies. So I don't like those companies that are trending up but are just channeling. I like those stocks that move up very quickly and instantaneously. So I look for big candles. So I encircled that part wherein the chart looks like a flagpole. The ascent of the price is vertical, almost vertical, and it's together with huge volume. So volume, as I said, as I teach during executive course, it has to be 10 times above the average. Then from here, I look for the catalyst. So this is a stock I traded so many times this year. It's my top gainer for the year. So if you look for the catalyst, then you confirm it, just confirm it with price. Okay, so I want to talk about the Hong Kong biotech sector. So before I talk about the Hong Kong biotech sector, the reason why I like the sector is, for one, last year was the first time that Hong Kong allowed unprofitable companies to list on Hong Kong Stock Exchange. So this allowed a lot of the biotechs, that develop novel therapies, who have zero revenues, zero profit, they have big losses, to actually be able to tap the Hong Kong stock market to raise funds. Okay, and this is where a lot of the new developments are coming from. Okay, so a lot of money, institutional money, they have to go to the Nasdaq for that, to find all these biotech issues. So a lot of them are now coming to Hong Kong. So this could be a big area wherein money flow could flow into eventually. Okay, so the one that I really like, the one that I like the most is Innovent Biologics. It's 1801 in Hong Kong. So it's about $50 billion market cap. Its main product is a PD-1 inhibitor, Tyvit, named Tyvit. It has NDRL approval. Okay, so what does this NDRL mean in China? This is the National Drug Reimbursement List, the NRDL. Okay, so if you are part of this list, the government will reimburse the cost of the medicine to the patient. Plus, this is the only PD-1 inhibitor that is listed in the NRDL. The purpose of the NRDL is to bring down drug costs for mass consumption in China, and it also favors the novel therapies. It means the oncology drugs, biologics, and all these new types of therapies that need a lot of support from the government. Okay, so it has already one product that's in the NRDL, so that's a Tyvit. They have 22 drug candidates, and they have 5 candidates in phase 3. So out of all, I screened all the biotech stocks in Hong Kong. This has the most drugs in the pipeline, and it's actually already making revenue. Okay, the difference between, maybe you'd ask the difference between biotech and pharma companies. Pharma companies are already these big companies like Sinopharm or Sinopharm 1177, 1099, that usually they are big companies. They have huge portfolio of drugs already. They don't do their own R&D anymore. They actually pay these smaller players like Innovent Biologics so that they could market their drugs. Okay, so for me, these companies still have a lot of potential and they have a lot of speculation in them. So this fits my style perfectly. Okay, so there are two news that came out for Innovent Biologic last week. So first is their bile duct cancer drug developed with Insight which is INSI in the US, listed in the US, has been given FDA approval. Okay, so this will be their second drug. So their other drug, which is Tyvit, which they are already selling. This is for Hodgkin's lymphoma. They got approval for a second indication, which is for small cell lung cancer treatment. So this also came out last Friday. Okay, so for this Tyvit, they already made sales of about 1 billion RMB last year. This year they are probably on track for about, for me, at the minimum 1.6 billion. Then with added indications for they're continuously filing with the Chinese authorities for other indications for oncology. I think 1.6 billion is probably conservative. Okay, so last week also Credit Suisse also upgraded the stock. Actually, I think their target price is quite conservative at 41.5. It's because Tyvit already delivered 400 million in first quarter sales, which is already 30% ahead of estimate. So I think this is still even very conservative considering that they're continually filing for other uses for Tyvit. Okay, so this is the chart of 1801. So you can see it was in a good uptrend before the COVID issue came along, and a lot of biotech issues were just dumped indiscriminately. So right now, you can see all of them are close to their new highs already. Okay, so you have the V-shaped recovery, and I think fundamentals or the story will come back into play after people panic and just dump everything during the COVID crisis. Okay, another thing is back in 2018, when it had no revenues, it had about 5 billion loss. Last year, with about 1 billion in revenues, loss was narrowed down to 1 billion. And probably I would expect there's a fairly reasonable chance they should be profitable by next year. So these are the stocks that I really like, because that's the same situation when we spotted Ali Health and Ping An Health last year, when they were still not profitable and were turning into profitability, because these were a lot of speculation. Because when you're coming from a net loss going to a net income and your revenues are growing at that pace, it's so easy to hit 1 billion in net income. So this is where people's speculation, their imagination, you cannot compute. If you even try to compute, you cannot try to compute with any accuracy how much they are going to make. But you know the direction in terms of they're gathering enough revenues, then they have operating leverage. You know that they're trying to turn profitable already. Okay, so 1801 is my top pick in the biotech sector. Okay, the other one is Viva Biotech. This is quite a different case. I specifically chose this one in contrast to 1801, because 1801 is very speculative, small base revenues and coming from a net loss. This one is actually profitable. The reason why is it has a more stable business. Okay, this is into CRO or contract research organization, contract research manufacturing. So they are the subcontractors for the early stage, preclinical stage biotech companies in China. Okay, so the advantage of this is the Chinese government through the NDRL is promoting a lot of novel therapy R&D, and because being part of the NDRL, you have on the average there's a price cut of about maybe 40%. They have to cut costs and subcontract the trials, a lot of the clinical processes to CROs like Viva Biotech, 2269, which is Wuxi Biologics, and 3759, which is Pharmaron. So I focus here on Viva Biotech. It's just a 7 billion market cap, so probably about 15 to 20 times PE. Valuations here are more probably more tame than actual biotech stocks that go into R&D. However, these are more profitable. So the reason why I chose this in contrast to 1801 also is so that I can show you guys the difference in terms of expectation. So while I'm expecting 1801 to have volatile and vertical moves, Viva Biotech should have more channel-like and stable moves. So I don't think this will run quickly. But if you're more risk averse and want an exposure into the Hong Kong biotech sector, this is a very nice pick. Okay, although if you look at it, revenues are growing nicely, 50%. Net income is also growing very nicely. Okay. This also has a stock buyback, which they instigated last year. So looking at the chart, it's a huge reset. It's a huge sideways. But the reason why I like charts like this is after the IPO, they IPO'd at about $4.40. So this was a successful IPO. Usually IPOs in Hong Kong go into stage of neglect of about 6 months or more. But if the story is there, the fundamentals are there, this reset after the IPO period is actually the best time to pick up these stocks. So once they start going into new high, you can have huge moves. This illustrated in stocks similar to Ping An Health when it was at $40. It was also a 6 to 12 month reset after the IPO. Weimob, which is 2013, is also a 6 to 12 month reset after the IPO. So eventually the fundamentals will come out. Other biotech stocks to consider, we have 9969, that's InnoCare, 9926, Akeso. So this is one of the most oversubscribed stocks in Hong Kong history. You have 1877, Junshi Bio, which I think is also has a fair chance to get into profitability. The interesting one here is 6185, Cansino Biotech, which we have been trading a lot recently. This is the company that is working with the Chinese military for the COVID vaccine. So they call it AdCov. Today, they filed for clinical trials also in Canada. In China, they are already in stage 2, and probably within a month or so, they will try to get into stage 3. So among all the vaccine makers for COVID around the whole world, this is the only one that is in stage 2. Inno and mRNA are in stage 1. Okay, and 9966 AlphaMab and 3759 is another CRO or contract research organization. It's called Pharmaron. Okay, so with this, we end our presentation today. Nice hearing from everybody. And we open up our floor to questions. Thank you, guys.
Okay. Since there's no questions yet, maybe I should ask a question. Guys, thank you for the wonderful presentation. I think Zarr is missing from the channel. So maybe, Terence, you can share more about in terms of execution. One of the biggest challenges for biotechnology companies and some of the stocks that you showed, for example, like 1801, is that the volatility for these guys can be very extreme.
Yes.
And trying to find ways to participate. So, for example, like the Ali Healths and the Ping Ans, the volatility can be very extreme that might be hard to enter. But given your mental preparation, I mean, you did already the huge amounts of due diligence into these stocks. Do you adjust, for example, your VAR, your trading sizes, or how would you manage your trade, for example, when you're trying to enter high volatility situations?
I think it's good to always do a pyramiding strategy, especially in Hong Kong. Always look for follow through the next day. It's also important because of the volatility that you have to scalp some of your position and just hold on to a small core position, because these stocks can return huge percentage. It's also on the mental preparation, I think, is the biggest key, because I think stock picking has been working for us in Hong Kong these past few years. It's just the market volatility. So you really have to be conscious of your sizing, and for me, once they go into new highs, you just have to trail it with the 5-day or the 10-day EMA. Okay. So again, in the end, price and volume is your protection.
I noticed that some of the stocks that you showed, for example, for the share buyback, normally I see them through Bloomberg and and through iInvestor. Is it possible to see these data in AA stocks as well?
AA stocks, they come out with it, but sometimes it's just a bit lagging by a few days, but they do come out with it.
Okay. Are there any other questions from anybody else?
I think we're good. Just a really quick announcement to everyone. So you know, we have gone through all of our coaches. Congrats, coaches. So you've met every single one already. For those who have not attended either executive or the recruitment, at least now you know pretty much everyone here. So for the past 5 weeks, we hope that they've helped you guys a lot. Edwin, I think we are uploading all the videos on YouTube.
Yeah, right? We will eventually.
Yes. So we'll be rolling them out slowly over the course of the next few days. Please stay updated on our Facebook page, because we will let you know once the videos are online. So I think so far so good. I hope you guys were able to make money in the course of the 5 weeks with all of their ideas. So all right.
So today's topic was slightly different from what we were trying to do over the last 4 weeks. So if you notice, like the research team's view was more in terms of megatrends and sustainability, and they're actually a lot more safer in terms of what Terence and Zarr are looking at. Okay, I mean, even though Zarr is also the Caylum head of research, I mean, he still tries to look at these short-term bursts and anomalies that happened in terms of speculative issues. And as traders, sometimes people have different time frames and expectations. So I want you guys to know that everything that is shown today is actually mostly in terms of short-term in nature. So understand that these are speculative, so understand the risk involved, and also understand that stop losses and risk management are still very critical components when it comes to all these issues that are for short-term trading. Okay? So with that, thank you guys so much. Any other?
Terence and Zarr, thank you so much
Thank you.
Especially the guys who don't show up on our podcast as much or on our videos as much. Especially Terence. I think this is your first time on a Caylum video. He handles our executive course, as he's mentioned. So I think the executive guys here, our alumni members who are online right now, would know him, but not everyone else. So thank you everyone.
Thank you.
Thank you.
Thank you, guys.
Stay safe.